Welcome to Word on the Beach Monthly Market Insights from Green Street Advisors. Joining us today is Adam Markman. Adam is Managing Director of Green Street and Head of Green Street Consulting. So Adam, let me ask, there's already been a lot of merger activity in 2011. Do you think we'll see more?
I expect it will. REITs are currently trading at significant premiums to their unlevered asset values as well as to net asset value. And as long as this is the case, they benefit from a huge cost of capital advantage relative to other sources of real estate capital. This low cost of capital is the fuel that's driving the M&A engine.
Are there any reasons beyond the cost of capital advantage fueling M&A?
The other thing that we're seeing to fuel the M&A activity is the need in some situations for management teams to bolster their skill sets, either through the acquisition of, say, a development team, a company that sees with fundamentals improving the future growth is going to be involving development, yet they don't have a team, and they need to bolster their group through an acquisition, or perhaps it's through the acquisition of senior management that will ultimately play some role in succession.
How about IPOs? American Assets got through. Will there be more?
We will see some IPOs. I think they'll come from three different sources. The first is niche sectors of the real estate market where we don't currently have a presence on the public company side. I think it'll come from some of the companies, typically those that have been privatized in the past, that are really too big to be acquired. They'll need to do a public execution. And then lastly, and maybe most importantly, just ego-driven transactions.
What recommendations do you have for companies that are looking to go public?
I think no matter how they come, it'll be very important that they get the structuring aspects of their transaction that are in their control really, really right. Things like corporate governance, boards of directors, how they deal with conflicts of interest, how they structure their balance sheet. That kind of stuff has to be done right. The market has really shown no mercy if a company has strayed from the line.
Outside of the publicly traded REIT space, what trends are you seeing in your consulting practice in terms of demand for services?
We're working with a number of large institutional clients who are asking us to help them to understand and evaluate special situations in the REIT space, IPOs, some REIT conversions, and private placements. We're also spending a lot of time with the management teams of some of the non-traded REITs. Those management teams see the writing on the wall, and they are trying to adapt the best practices from the publicly traded space to better align the interests of their sponsors and shareholders, ultimately with the goal to either come public or at a minimum to just be more appealing to the due diligence officers at the broker-dealer who are now recognizing the risks of non-traded REITs.
Thank you, Adam.
Thank you very much.
For REIT.com, I'm Carissa Chappelle.